In this section, we'll focus on the all-important concept of the taxable persons and the corporate tax is. I'll be dividing it suitably into the sections so that you guys can easily understand it. So the first area is that what is a taxable person? As per the CT Article 11, we divide the taxable person in two categories. First one is resident, second one is non-resident. Basically, the main difference between these two is that somebody who is incorporated in UAE and effectively managed and controlled from within UAE will be classified as resident, and somebody who will not fall in this category, of course, will be classified as non-resident. So let's now see them in detail. So a resident person can be of three types here. First one is that any legal entity, which means any company which is incorporated in UAE and it includes the free zone. So any legal entity which is incorporated and functioning from within UAE, including the free zone, of course, will be legal person, and it will be the first category of being a resident entity. Second one is an individual, a national person who conducts a business. First thing, which means that he has a trade license in UAE in his own name, or he is conducting a business activity in UAE. Now again, as I explained in my previous sections, is that it's not only the individuals who are having a license and conducting the business activity. It is that if anybody conducts a business activity in UAE, which means the guy is he's habitually conducting some activities and he's earning income out of it. Of course, employment income will not be considered in this. So second category, which would be resident, is national person here. Third category, which is extremely important for the entities who are incorporated in some other countries. So if they are incorporated in some other countries, these companies, if they are effectively controlled and managed from within UAE, in this case also they will also be considered as resident. Okay, this is a very sweeping section in this regard, is that if a foreign entities, all decision makers are sitting in in UAE, in that case such company will be effectively controlled and managed from within UAE, and in such case its all income, global income of such entities would be taxed in UAE. So anybody who falls in the category of a resident, main differentiation is that all his global income, worldwide income, will be taxed here in UAE. Now the concept which is here, which says that effectively managed and control, is kind of a tricky thing, because it's not that if somebody, for example, if some company has just opened a finance, you can say the area where all its employees of accounts and finance are sitting here and only conducting the finance activities. In that case, it may not be effectively controlled and managed from within UAE, but if its CEO, the board members, all those who decides about the company affairs are sitting in UAE and effectively control and manage the entity from within UAE, in that case it would be considered as resident, and we would be having its global income being taxed here. I'll give you an example here. For example, we have a holding company, for example, in AVI. Okay, it is of course a tax haven, and this BVI is 100% owner of a company in UAE. Okay, all the profits it earn is being shifted here, and this BVI is also doing some independent activities also, such company. And the interesting area is that all the decision makers are sitting in UAE. The board members, the CEO, okay, the board, all of them are doing activities from within UAE. In such scenario, this BVI company would also be considered as resident, and indirectly all its income, global income, would be taxed within UAE. Next, of course, would be somebody who would be considered as non-resident. In this case, of course, who is somebody who will not fall under the first category, and such entity fulfills any of the following condition. They have a permanent establishment in UAE, which means that a company has a branch here, a company is having significant presence here, and it is conducting the business from within UAE also. They may have a factory here, they may have something else here. So they may have a branch office, a site office, any such thing. In that case, the concept of PE, the permanent establishment, will be triggered. We have a separate section also, and in that section I'll explaining you in detail that how a PE can be triggered. But if some company which is a foreign company, they have a branch here, in that case, such branch would be taxed on its UAE sourced income. And second scenario, if a foreign company is deriving a UAE source income, which means it is selling something from within UAE itself, in that case also it would be a non-resident entity, and its UAE income would be taxed here. Final thing is that it has a nexus in the state. Now nexus, how we assume is that it may be a part of some sort of global conglomerate which is operating, and the FT, of course, in due course will be clarifying it in a decision issued by a cabinet. So at present, at the time I am having a recording for this session, up till now we don't have a definition of what could be included in a nexus. So the main differentiation between the previous one, that if somebody is resident or a non-resident, is that for a resident, of course, its global income would be taxed, and a non-resident, it would only be its income which is conducted from within UAE, the activities which he is conducting from within UAE, only such activities income would be subject to UAE tax. And in next sessions I will be explaining you in detail that how these incomes are being calculated.